Welcome back, folks. First analysis video for 2018. Appreciate you guys giving me a break. So we're looking at the monthly chart of the dollar index. Okay, there's a couple levels I want to keep in mind as we go forward into 2018. Obviously, we've had a really nice rejection at the 103 level, just falling short of that 104. Get this to pop up here. Yeah, it just fell short, 19 pips short of the 104 level I called back in 2014. Wow, it's a long time. But we're looking at the monthly chart, and we have come back below these lows, and we're really retesting these old highs back here. And we like to focus on the bodies of the candles, and obviously because price is fractal, we're looking at the bodies in the same way we look at a lower time frame, not so much the wick. Okay, you can see that the market has really had no respect whatsoever for the wicks here. We are now trading inside this one relative to the current price action right now, but I do suspect that we'll probably want to come down maybe a little bit deeper into this candle here. So this last up close candle, that may be a reason to dip into that a little bit more, but it would have to first show a willingness to go below 88.10. I know I'm showing 88.05 here, but 88.10 is the level I'm looking for, and then 88 big figure. Anything below 88 big figure takes us into potentially into 86.60, 86.80 in that area here, where we'll be referring back to this old swing high. Okay, and that's just a long-term macro view. And obviously, if we start trading to these levels, then I can come back into these and give a little bit more refinement. But this is what I'm looking at from a higher time frame monthly standpoint. And we'll look at the respective level. We'll look at a weekly perspective on both euro and cable. It'll just be a mirror image of what we're anticipating here on their monthly charts. All right, so let's drop into a weekly. Okay, and we'll scrunch this up a little bit so you give us. All right, so now we're looking at how the market has really come down below this low, and there's really only a small little inefficiency in the scope of the weekly, and that takes us back up to this level here. So we're going to basically take this level here, drop it there. So we have a little bit of an inefficiency here, only sell side delivery. So we'll be looking for potentially, if we get any kind of bullishness at all, and I'm not saying that we will because it's Sunday still, so I like to see what's happening on Monday. But if we do trade up into this on Monday or Tuesday, that may be a catalyst for another round of selling that could be taking it down into the 88.10 level. Okay, so if we're bearish this week, 88.10, 88 big figure is my objective for the dollar index. That'll be a large range for the weekly, and that is right on top of this last week's small compression. Okay, so we have a real big nice slide here, cascading lower on the heel, on the heels of these large ranges. We got now last week a very small range. Now I know that wick from high to low, most people are going to be looking at that. I want to be more focused on this small little range. Okay, that's what we're looking at, the bodies of the candles. So we may see another compression, okay, where the range contraction takes place again in here. So if we get very tight, narrow range price action, all that's going to do is create a much larger probability for the next week. Okay, or not just specifically this week, but next week we may get that large range for the weekly. And that'll set up really dynamic moves for day trading and short-term trading. As it is now, I'd like to see if we get back up to that level. And let's look at the low on that and get a better feel for what it is. It's 90.11, so we're looking for like 90.20 to 90 big figure on the upside. That should be an area of short-term resistance. You know, start looking for short-term sell patterns in that area. We could do some exercises on that. But right now, it's still, to me, bearish on the dollar. If we get above this inefficiency right here, in other words, the inefficiency is between from this low here on this candle, right there, and the high on this one. Okay, so 89.65. So a little bit of an inefficiency there, only sell side delivery. So we could see price come back up and rebalance that, and then maybe take another dive lower, again reaching for that 88.10, 88 big figure. Anything below 88, again, we're going to be looking for 87s primarily, and then getting down to 86.60. And that's a very long-term objective, and it may not be relatively quick getting there, because we've already seen a large move already take place on the dollar index. So we could potentially see a lot more choppiness now, because it's been a large price swing from this high going lower, and we'll be looking for reasons to now, it's a trader's market basically, where this has been all trending. Now we have to look for key levels to work within in terms of support and resistance, and we're going to be looking primarily for this inefficiency to fill for the highest probable condition. Now if we trade lower, okay, if we start off on Monday and setting up into Tuesday's London Open, we trade down to this level first, then that may be a catalyst for it to trade here first, and then maybe come back up here for this being the weekly range. In other words, it could open, trade lower, maybe hit that 88.20, 88.10, 88 big figure. That may be Tuesday or Wednesday's London Open catalyst for a long, only to come back up here to refill in this inefficiency, and that may be the weekly range. Okay, and it may set up a sell signal, may not, but right now that's what I'm waiting for. It's higher probability for price to want to trade up to this level first and then trade lower. That's the more probable scenario for me. I'm looking for that one. Okay, I favor that one. But if we trade right away going lower and we hit the 88.20, 88.10, or 88 big figure, and yes, it's 3 levels, but it's the time it hits that level. So in other words, if it trades to say 88.20 and it's before Asia's open, okay, say it's like 5 o'clock New York time, it's not going to be a level that's going to be important to me. If it hits it around 2 o'clock in the morning, London Open, then I'm much more interested. Okay, I'm going to expect some reaction there. But as it is, that's what I'm looking for, dollar index. I want to see a move up, close that inefficiency in, and then see if I get some SMT divergence, something to give me some kind of a fleshing out or a framework of a potential sell in a dollar contrasted with a potential long in the euro or cable at the same time it hits this level here. Again, as a reminder, it's far less likely in terms of high probability, not likely, okay, if we trade lower first and leave this inefficiency there. I would rather allow it to go up here. Everyone else is going to think the low is in, and that's exactly what I would rather see. That's what makes it more probability. Okay, so the ones that are asking why am I looking at that in the view of it becoming more probable than if we trade lower first, obviously you're probably thinking if it trades lower, why not just keep on going lower? It may do that, but from the standpoint of looking for a high probability sell, which is what I'm bearish on the dollar index, I would rather see it trade back up to this level first, and that would close in this inefficiency. Anything above that, okay, puts us back into this low here at 91. I'd rather see it not trade back to that at this point. In other words, I don't want to see it from here trade up to 91, because then we could stay in that range for a while, and I don't like that, and that range being the low here to 91. Don't want to see that. Highest probable scenario would be, again, going back, fill this inefficiency, and then go lower. I will look for a day trade, okay, not short-term trade. If we trade lower first, then my trades will be on the scope of day trading only. If we trade up to this level first, then I will be looking for one shot, one kill, bearish dollar, long euro, or cable. Okay, so that's our framework for this week. I'll drop down into a daily chart, give a little bit of a... Okay, so we can see that same more or less inefficiency on the daily chart. That's really designed in this area here, so I'll take this level and refine it from what we saw on the weekly and put it right here. So now all we're doing is refining our fractals from a monthly to weekly, now daily. So we now have our inefficiency level right at this candle's low, and it comes in at 89.97. We're just going to basically call it 90 big figure, because it could obviously whip through that a little bit, but anywhere between 89.95 to 90 big figure, I'd rather see it do that. Now, notice now what we see here, a little bit more detail. We have this low here and almost equal lows here. So if we rally up, see what's happening? We're getting that dynamic propulsion, if you will, okay, where all the folks that are out there looking for the dollars low, they're going to get excited and think this is that double bottom. Okay, all the retail traders are going to be thinking, oh, this is where it's at. You know, it's time to get long dollar, and let's get in there and go long, and we can sell euro dollar, we can sell cable. I'm not saying that's what I'm doing, but I'm just saying that's the sentiment idea that's going to more or less form. Notice also, if we look at this here, okay, we have a candle high, a lower high to the left, and a lower candle high to the right. This is our swing low. We take our fib, drop it on here for range. This is the highest body, open or close, so we're dragging it from here down to the lowest open body or close, which is right there. Okay, so it's on these candles here. Specifically, I'm looking at this down close candle and this up close candles. I'm sorry, down close candles opening price. So that's the framework I'm using for the range. Okay, and now notice what happens. If we get back up to this level here, which closes this inefficiency up, it goes right inside of an optimal trade entry. Notice that. Let me zoom in a little bit so you guys can see it. Okay. So here's that range. This candle's open. And this is a swing high. So we look for the highest open or close in that. Drag it down. Okay. Everyone else is going to be looking at this back here for their fib. Not me. Okay. So this is what we're looking for from this range high to this range low. And here is our 62% retracement level. And just below the 70.5, our sweet spot, that's where our inefficiency closes in at. So we're looking at a really nice scenario potentially around that 90 big figure. So if we trade up to that, that puts me on sell alert for dollar, which is a long bias for euro or dollar. I'm sorry, euro dollar and British pound dollar. All right, so let's segue right over to the euro dollar. Okay, and this particular pair, if we get that selling scenario in the dollar index, okay, I'd rather see it spike up in the dollar and not see any drop down on euro. That would be a really good catalyst, because then we're seeing real clear manipulation on the standpoint that the dollar is going up to that 90 big figure. And if euro doesn't follow suit by dropping lower and breaking down in its market structure, then we know we got a tiger by the tail, most likely. So then I'll be looking for price to get up into this bearish order block. And that looks like this. We have this level here. Okay, so we have this candle's opening at 127.41. So it's we're below, we're coming up to it. So we're looking at 26.40 or 26.20. I like 26.40 because if you look at the open on this candle here and the close on here, we're basically in the middle of that. So we're in equilibrium, or the mean threshold of these two up close candles, which together would be, if we could make two weekly bars become a time frame, this would be one bearish order block, one big up close candle, if we kind of like blended those two together. So we look at the total range when we have consecutive candles like this. So that's about the midpoint of that, and that comes in at around 26.36. Again, we're below it coming up to that level, so 26.35 is the level I'd be looking for, 26.30. So that's what we're looking for as an upside objective on the euro dollar from a weekly standpoint. Now, we could, if everything unfolds in completely opposite terms, these are the things I'm waiting for. I'm anticipating these types of setups. These are not trades. I'm looking for the framework to build the ideas around these scenarios that would lead to price trading to these levels. But say we get a nice pop up in the dollar, and maybe it goes through the 90 big figure, okay? Then we would probably see the euro dollar come back down, and then we have a small little inefficiency right in here. Let me take the dividers off and zoom in a little bit. We have a very small inefficiency right in here. Only buy side delivery, and the framework is the low here at 121.65, and the candle's high here at 20.89. So again, we're above it, so we would go to 20.90. So 20.90 is the level, and now go over here. Look what we have. We have an old high back here. So now it's not just old highs and old lows, classic support and resistance, that makes that level significant, because obviously if it was so easy, support and resistance would be the way to go to, the pearly gates. It's not the case. This high is significant and would offer support, not because it's an old high and we traded through it, but because we have an inefficiency here. So the algorithm will look to be more or less allowing buy orders to start stacking up in here. If we see a breakdown in euro and strength in the dollar that goes beyond the 90 big figure, this would be the area I'd be looking for that to be capitalized for new buying. Okay, so if we have that, okay, now we're going to add our fib for range again. So we're going to use this swing low here, and I'll come back to another scenario. In regards to what we saw on the dollar index, this is basically opposite. Right now we have this candle right there, the one we're forming right now for this week. This is our range. Notice what's happening in here. We have this level, which is the old high, and we have equilibrium. So we have basically price coming back down to the midway point of it. And if it's our range, which is our low, and if this high stays intact and we trade lower right from the jump from this week, we could come back down to the midpoint or equilibrium of this total range, and that's the same thing or significance of you would expect with a bullish or bearish order block, okay? Because we're trading back to the more or less like the fair value of it, okay? The middle of the range. We're not oversold, but we're in a level where that would be enough to constitute some new buying. It's significant because we have this inefficiency in here at the same point, and it happens to be an old high. So that in itself is enough. I personally don't see that in here yet. I think that, you know, maybe the euro might have a little bit of a retracement lower, but to come all the way down here, I think that would more or less spook the bulls. And while that may be good in other instances, I don't think it's necessary from where we're at. I think everything's already in place, and anyone that's not long now isn't really probably going to get a chance to get it at a real, you know, cheap price like this. They're going to keep it stretched out and make a run into that 26.35 from where we're at. Okay, so let's drop into a daily, and we'll see what we see there. Okay. All right, and now from a daily standpoint, we have that old high from a weekly standpoint here, and I'm just using the equilibrium price point to remember where it's at, and I'll shrink it up so you guys can see it. It's right here. Okay. Now I want you to take a look at this area right in here. Same scenario that we saw here with the weekly high. Price can come back down to equilibrium, which is that level here, hit that level, and closing this inefficiency. That same element, okay, of price action can be applied with this high acting the same way this high is in our weekly example. We have a small inefficiency here because price came down, didn't come all the way back down to this candle's high. So only the upside movement here is what we see in terms of order flow. So only buyers have been in the marketplace here. The market didn't really offer anything in terms of selling. Same thing here. Market trades higher, didn't come back down, right in here, stopped, fell short of coming back down to this old high. So between this candle's high, all the way up to this here, price came down, but did not come back to this price point or this price point. So there's an inefficiency right in here. This may be the downside catalyst, I think personally. This one would be less likely for me. I mean, I'd only be interested in it if it traded down to here. If we lose this high, in other words, I don't look at this as a bullish order block right now. Like I don't see it coming down to that level here, and that's a buy. I don't like that idea. Okay, I think that if it's going to be a buy, it's going to be a buy right on this candle right here. This candle's high at 123.15 or 123.10. Okay. Reason why I'm going with 23.10 is if you look at the close, it's 123.08, and to come down to that level, we'd only need to go to 23.10, not to 23.08. It could spike to 23.08. I mean, we're only talking about 2 pips, but that inefficiency right there, only buy side. Okay, and you'll learn more about this as you go along if you're new. But price trades down. We trade through this little pocket. In other words, look at it like this. This is what I'm outlining, okay, in terms of example. If we get a drop down into that little area here, price drops to that. That would be a catalyst to maybe run the equal highs if they're left like they are here. This is basically the same thing we had on the daily for the dollar index. Let's go back real quick. You see that equal low here, okay? Zoom out a little bit. Equal lows. If we run up to here, remember we're looking for potential sell-off. Well, we're going to have the same thing, just in the opposite. If you see it drop down as we would see the dollar index rally up to 90. If it trades at that price point here, that would be a buy. Now also, we're going to add into it the optimal trade entry for range. So I'll just borrow this fib. Okay, and we're going to use, let me put the price points where we're actually looking at, because I'll probably get confused. And if we stay exactly as we are right now. Okay, so our range is this swing low. Here's the candle. Higher low to the left, higher low to the right. We're using the lowest close or open, which is this one here. Drag it up. Look how beautiful that overlaps with optimal trade entry in here. So we're looking at potentially the 79% retracement level. If we trade down, hit that, no one else is going to look at that as a potential buy. Okay, they're not going to see it. They're going to see that's a double top, and they're going to think that's resistance, and it's going to sell and break lower. It can. I'm not going to say that it can't, because obviously our textbook shows examples of that, but they sell that narrative. So I'm thinking if we drop down as we hit 90 on the dollar index, okay, this would be a really nice buy. Also, look what we have here. We have two equal lows. So we have a lot of things stacking up around that 2330 to 2320 level. So 2320, 2325, or 2330. Depending upon what time of day it hits those levels, again, think of the ICT kill zones. If we trade to those levels, then it would be significant, and I anticipate those ideas unfolding and then running up through the equal highs. Now, I do suspect if we trade down to this level here and then go up, okay, we could trade to the 2635, 2640. In here we have target 2 on the fib lining up exactly at basically 2670. So if we spike through that level that I outlined on the higher time frame weekly, that's probably where it's going to reach for. Now, I would be long gone before that anyway. Personally, I'd be out at 26 big figure, okay, or just a couple pips below that, and be content with that and not really care too much about it, assuming I get a long down here. Okay, so that's what I'm looking for. Now, if we run straight through, okay, if we run straight through the equal highs, okay, and we get immediate bearishness on the dollar index, here, say this rolls through the equal lows, then I'm going to look at this level here, okay, the 2575 to 2580 in that area. That may be a catalyst for a turtle soup, okay, or a false break. In other words, run above these highs, and it may not even go to this level right away, and then come back down later on for this as a weekly objective for the low, or the weekly range low. Okay, so that's a potential scenario. That's why I'm saying I'd rather see the dollar index rally up, and if this does drop down, this is what I want to see it drop to. I don't want to see it drop down like to below here, or use this as an order block, or this as an order block, okay? I want this level here specifically. That's what I'm looking for, okay? And that's the euro, so let's go to cable. All right, so we have cable reaching back up into the Brexit. Now, I think it personally wants to erase that stain in terms of the Brexit. I think they're going to probably want to take it above this high here. If it really gets wildly bullish and bearish on the dollar, we could be looking for a challenge on this for this year. Okay, I'm not saying this is going to happen next week, okay, but I think this could be a real target if we start to get really strong on British pound. And if we start looking at things from a higher time standpoint that would suggest further weakness on the dollar index, man, that would be the one that's to me, this is like a mega trade setup. Like, I'm thinking if we get something that line up with a really good buy going long, that's what I want to see this year. Like, we have a full year ahead of us. You know, we're just now starting February. So if we can get an opportunity to set up a really long-term position, man alive, that's the one. That's the one I want to aim for. Now, you guys that are in the UK are probably thinking, man, please let that happen. I'm getting the mentorship really cheap then. But I think personally that may be the catalyst if we get through the Brexit stuff. Now, if first time we punch through this, there's going to be a lot of take back. In other words, profit taking, and it may be pretty aggressive. It may take us right back down into this low here. Okay, in other words, say we run through, take out the high. They may sink it eventually to about the same low here, okay? Because this inefficiency has now been filled in. Any drop down, we only have a very small one in here. Let me zoom in, and I'll let you see exactly what I'm referring to. right in here. So we only have buy side delivery there. Okay, so any drop down, I'd only want to see it trade down to this candle's high. So basically 37.50, 37.45, that level there. Okay, and let's look at that in terms of the range. Okay, here's a swing low, low, higher low to the left, higher low to the right, using the lowest open or close. So we're defining our range right there. Notice what's happening right at the sweet spot right there. See that? So if price drops down to that on weakness, on strength on the dollar, trading up to 90 or maybe going through it a little bit, that would be an area I'd like to be really excited about, looking for longs at 37.50 to 37.40 in that area. That would be a real good scenario to look for potential long-term swing setup. That's not a day trade because we're looking at a weekly chart. That would be a really good candidate for swing to long-term position. Maybe. Right now, it's just a framework. We don't know what's going on as it hits there. We'll have to take that in consideration when and if it ever trades there, in the near term. But I'm really rather expecting it to hold in a small little range. Let the dollar index just really peter out at that 90 level, and then fall off. And if the dollar index does fall off of that 90 level in the weekly and then or daily, we could see this run through. So if that's what we see, that would be a really good scenario for long term, more than what you guys are expected to see from me as of recent months, because I'm more or less sticking to scalping and intraday trading. But a lot of you folks don't have that appetite or can't do it. So this is a potential scenario that may unfold for a longer term setup. But again, I'd rather see it stay inside this range, small little consolidation, and expand up. Okay, hold on to its consolidation. Let the dollar index reach for its 90 level. Don't see any drop down in Eurodollar or cable. That will show relative strength. And then we get that sell off at 90 in the dollar index. These two currencies could really extrapolate to the upside. Okay, so let's drop down into a daily. Okay, so now we have our daily chart, and this range obviously changes, so we won't have it on here now that we used it from the weekly standpoint. So that on the daily, we have not much in terms of inefficiency to speak of until we get down to here. And again, I'd rather not see it trade down there. We do have some stops right here, so that may be a catalyst should we see any kind of weakness that would eventually lead to a long that would clear out these equal highs. We could see it drop down, take out this low, gather up any of the sell stops that would be residing on anybody that's long. That's where all the stops are right now. Okay, so if you look at your cable all this week, monitor that 39.80 level. 39.80, 39.50, because remember 30 pips below that low. That's about how far the liquidity pool will rest. So 39.80 is this low here. 30 pips below that, 39.50. That puts us right about there, and again that lines up with basically this high, these equal highs. Yeah, 39.45, and it looks like that's a little bit higher than this one. Let's see what that is. Yeah, so 39.50, that would be a good run on those sell stops. If it does that, we could reject. Now, should it do this, okay, say we take this low out. On this pair, we would be really studying and looking for SMT divergence in the framework of for instance, a higher high forming on the dollar index. It should be expected with this low being taken out on cable. If that dollar index does not post that respectively higher high when cable takes out this low, like say it trades down below this low here, that's what we expect to see. Lower low here should be seen with a higher high in dollar index. If it does not happen to form at the same time that low is taken out on cable, then we have obvious indications that we had manipulation on the part of dollar index rounding up to 90, and or say it falls short of 90 and this low gets taken out on cable. At that moment, we're going to see an SMT divergence. In other words, a lower low being formed in cable. If that higher high doesn't form on the daily chart on dollar index, there's your opportunity to see a turtle soup long. Okay, so that's a pretty clear indication that they're going to come down and just be taking out the sell stops to be accumulated and then run the highs here. Okay, and that would be again the potential scenario for this week. Now, if it trades down below this low here, it may require trading into next week before taking out this high. So that may be one of those things you have to endure. If we do have a week that does that, say when we trade down below this low here, we will be looking for not just this week, but going into next week beyond this high. Okay, so it gives us a little bit, again, like a short-term to swing trade scenario. And that's going to be it from the higher time frame. We will monitor as we go along. If I have anything of any interest, I will send you a tweet and post it to the forum. You guys will have access to that. I'm not giving you my trades. I'm giving you levels I'm looking at that may give us really good exercises in study, okay, for price action. So that's going to be it. I wish you all a very pleasant week and good luck in trading, and I will catch up with you throughout the week with any updates.